Robert owns 50% of an S corporation, Blue Sky Inc., and has a basis in that corporation of $5,000 at the beginning of year one. At the end of year one, Blue Sky reports ordinary income of $10,000 and makes a distribution to Robert of a manuscript originally purchased for $1,000 but now valued at $8,000. How much income must Robert report on his personal year one return from this distribution? So this question is dealing with S corporations. Further, it's also dealing with distributions. We're told that Blue Sky makes a distribution to Robert of this manuscript. And the question's asking, how much income must Robert report with respect to the distribution? Now, when it comes to distributions, C corporations and S corporations, they have some overlap in rules. The first step is always to consider the consequences of the corporation. So whether this is a C corporation or S corporation, under Section 311, we're going to take the fair market value of the property, which the manuscript that's distributed is $8,000. We're going to subtract away from that the basis. So it was originally purchased for $1,000. So $8,000 minus $1,000, we have a $7,000 gain. That $7,000 gain is going to be reported by the S corporation. Now, Robert owns 50% of that S corporation. So everything is allocated based on your ownership, which here is 50% for Robert. So therefore, this question, this is a real simple one. All you're doing is you're just determining, with respect to the distribution, how much income does Robert have to report with respect to that transaction? And the answer is, we take the $7,000 gain the corporation has to recognize, we take 50% of that, and the correct answer here is C, $3,500. Let's consider why the other answer choices are incorrect. So choice A is 0. So remember, the corporation has to recognize $7,000 of gain under Section 311, just like we had for our normal distribution rules for corporations. And Robert owns 50%, so he's responsible for 50% of that $7,000. So choice A is incorrect. B is $1,000. This is the adjusted basis of the manuscript. This is incorrect. Again, we use the fair market value minus the adjusted basis, and we take 50% of that. So choice B is incorrect. D, $7,000. This would be the full amount of the gain. Remember, when it comes to S corporations, we do the pro rata share of each income, gain, loss deduction with respect to each owner. So we take 7,000 times 50% Robert's ownership. So it can't be 7,000. So the correct answer is C.